Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about, can you earn a living trading 1 hour a day? Now, received an absolutely huge amount of emails wondering where I'm at, if I'm okay, if everything's all right. I've just taken a couple of months, sidetracked, school holidays, spending time with the family. Western Australia is still in lockdown, even though we sort of relatively have life as normal other than mandates, which everybody else in the world is starting to slowly unwind. We here in the West seem to think we know better, and we're doing things what everybody else has already done, and we are hoping for a different result, which strangely enough I doubt will happen. But anyways, it's been an exceptionally hot summer in Perth, and just took a couple of months focused on the trading, spending time with family, and just taking a break. But today you're going to be talking about trading 1 hour a day. I'm going to try and sort of overview everything as in detail as I can without spending too much time. Just going to lock in all the highlighted areas. But my main focus is 1 hour a day. It doesn't matter which session I'm trading. Typically, my main focus is gold and the Nasdaq, but we're going to look at the major pairs. We're going to talk about the weekly templates. I'm looking for simple setups, so I'm not looking to trade every single move in each session. I'm looking for the obvious setups. Now, I'm probably more strongly biased to selling, to short selling, than I am the long trades, but we'll talk about the psychology behind trapping traders as the week starts to evolve, and looking at the major pairs and looking for just the simple setups, day 1, day 2, day 3, day 0, and just looking for the simple stuff. As I said, I'm looking for trades that are going to blow off and be in and out of the market. I've spent years studying these markets and trading them, and I've done every mistake possible that you can make. My main focus is to capitalize on the explosive moves, be in and out of the market, and be done within 1 hour or less. I'll talk about some of the reasons why I stick to these basic concepts, and most of it is to protect you from doing things that will completely destroy your account, your psychology, possibly your emotional state of mind, and potentially a lot of other things if you allow it to escalate. So often these timings, we'll start off with that. Timings, Asia, London, and New York. I've talked about this over and over again in all the videos. I receive emails constantly about, what about this time? What about that time? What about London? What about this? All of my timing is based off New York Eastern Standard Time. Asia, 8 to 11 p.m. London, 2 to 5 a.m. and New York session 8 to 11 a.m. and specifically for London and New York, 4 a.m. and 9:30 a.m. That is when the equity markets open. And actually, sorry, I should change that to 3. Currently, these are New York times. That's 4 o'clock my time. Right now, we have an hour difference to New York. It's actually 13 hours, but it's when we're on normal time, daylight saving time. We're an hour. 13 hours ahead. Normally it's 12, so the time is the same 24 hours a day. But these times are very specific to how the markets behave, and that could be because of the algos, the institutions, the market makers, whatever you want to call them. I'm not going to debate it or discuss really. I've heard tons of different people talk about stuff, and I just laugh. It's really simple. It's the time of day. Time compression is a huge important thing to understand. We'll talk about that in a minute, but these times are critical, and specifically these equity market opening times, especially for the Nasdaq 930. I mean, we can get movement all day long for London, New York, and Asia, just as we saw this morning. And we'll look at Nasdaq and gold. We'll look at some of the major pairs for some specific high probability setups using the same process every day and every week, so people can talk about hindsight and everything else. Day 1, day 2, day 3 is going to show up every single week. We're going to get high of the week, high of the month, high of the day, high of the session, trade setups. We're going to get the same thing on the downside for long trades. So it's the setup. It's not about, cherry picking trades. We're going to talk about the same simple concepts, high a day and low a day. If you're inside, you're going to get caught into stuff potentially that will cause you to chase both directions or to over leverage when you're inside and get caught in a market that may be consolidating and just sitting there until the next session. And then all of a sudden it comes to life, 1 hour prior. So very important. High a day, low a day. And then if you're at the high of the month, the high of the week, or the low of the month, low of the week, even higher probability opportunities when these setups and these timing windows kick in. So sometimes you won't be right at the high or the low because maybe the high or the low is already locked in. We'll look at an example of the Nasdaq last night. High of the week, high of the day was already locked in. Sorry, not the high of the week. But yes, it was. The high of the week was locked in. And the session was inside, but they had a high and a low, and that forms a geometrical structure for a measured move. So again, I've talked about this with Peter Brandt's books. Read them, classical charting, understanding everything consolidates into rectangles that can become a compression pattern for an explosive move. Now, I mainly only focus at double zeros and 50s. The quarter levels to me are where range extensions will occur for stop hunts, 25 to 50 pips on a normal stop hunt or range extension, specifically high or low of the week. Again, we'll look at an example of that this morning on gold. Perfect example. High of the week, high of the month, high of the day. Friday, 4 days up, and bang, they went 25 pips above the double zeros through the previous day's high, locked it in, and dropped 100 pips. So again, engulfments, pin hammers, M's, W's, final flags, 3-push patterns, these are all things that will occur at highs and lows. Then time compression, which is understanding how time works. There's 24 hours for these markets to complete their cycles, 23 on gold and Nasdaq. And time compression means that it's about understanding that how movement can end or continue for a 15-minute cycle. Maybe an explosive move will move for a full hour. It's about time, the length of time. Not people are looking for counter trend and stop hunt trades, and you could be in the middle of a 1 hour move and you're counter trending a 1 hour trade, thinking they've put the high or the low in, and you just get smashed, and that's again how you'll blow out accounts. So not mentioned it here, but do not counter trend unless you know exactly what you're looking for at a high or low when that type of situation occurs. Again, we can get that after news prior to an equity market open. So we can get an equity market reversal that looks counter trend, but all that has happened is we've had a stop hunt to a previous day's high or low. The market goes into consolidation. The new hour starts. We see a break in structure, and then equity market opens and explodes for a 50-pip move that's over in 4 bars, or maybe 75 pips in 7 minutes, which can happen very frequently on gold or the Nasdaq. So again, it's understanding time and the types of setups. So we're not going to go into detail about every single type of setup, but we'll look at some examples. Then understanding pre-market setup, the hour prior. Have they locked in a high or low? We've got people being dragged way down low. They lock it in and start the reversal process just prior to the equity market open for an explosive, before that 12 candle window, for possibly an explosive 25 to 50 pip move back against the trend, which is a break in structure, but also a stop hunt that began prior to the 12 candle window because the low or the high was already locked in. And again, the equity market may retest that extreme with a stop hunt back to the high or the low. The major pairs, we'll look at some examples. Most of those moves are going to be 25. We've seen some 50 pip moves this week coming off third level up, high of the week, low of the week type of situations. So with news, I've gotten this question quite a bit as well. How do I trade the news? I don't trade the news. When there's news on the calendar, I'm either out prior to the news, depending on which news release that is, but I will wait for after the news, and often the news may be a false move or an explosive move that takes us, if it's a really big move on the news, that move may continue for an hour. We may get a first bounce trade that allows us to enter that explosive move. It may just go vertical, taking out a high or low of the month or the week, and then that situation may consolidate and give us a reversal trade again when the especially in the New York session, when the equity market opens. I take my levels from the daily and 15-minute chart. So daily, I'm looking for who is trapped in the market. So the overall structure, high and low of the month. The beginnings of the month are very important for me. We can see often reversals begin or continuations at the beginning of the month. If it's a reversal, we could be looking at a whole month of movement in the other direction, which allows me to prepare a bias based on how that sets up at the beginning of the month. Those daily levels also show me where breakouts have occurred, where traders that are in profit are, where the market may move to fill those breakout gaps, and also where we see traders trapped at highs and lows on the daily time frame. So they've traded the break of a high or a low. We know that traders are caught on one side of a daily bar. What is the setup on that bar itself intraday for the possibility of it visiting the other side to hit those stops on that daily bar? Is it at the high of a week, low of a week, that sort of situation? Trapping traders on the wrong side before reversing and heading to the other side. So again, it's understanding the weekly template. Sorry, just to go back, all my trades, once I have my levels established and the time frames kicking in and I'm looking for that first or second hour trade, when it's there, that trade will typically be done and dusted unless it's a very big move that continues throughout the session, which would mean it's typically going to be at least 3 hours of 1, 2, 3 on an hourly system. 1, 2, 3 in terms of the length of time of it continuing to move. Most of these trades, though, are over and explosive and very quickly over within 15 minutes to an hour. So I take those off the number levels, high and low, 1-minute charts. So again, just talking about the weekly template, type of trade. Is it just a trading range? Is it a scalp, a stop hunt trade for 25 to 50 pips? Is it a reversal trade? Is it a blow-off move from round number to round number? Again, we'll look at some examples on some of the major pairs as well as gold and Nasdaq. And is it a breakout trade? Breakout trades can continue, and we may be having a breakout of a larger geometrical structure. Again, if you're not sure what those are, read Peter Brandt's books, Classical Charting Patterns, Schaubacher. When you get breakouts of large consolidations from bigger time frames or from, 6, 7, 12, 16 hours, we can see an explosive move that can continue. Nasdaq, we can see them go 500 pips. Gold, a very large move would probably be 250 to 300. And these typically will occur at least once a week, maybe every couple weeks for sure. So these are great opportunities, even if you're just capturing a piece of that movement, to significantly improve or increase your risk reward on trade setups. Now, I'm very specific about the timing window. Yes, there are going to be other times when the market moves. We're not going to talk about the gap trades yet, but again, I'm looking for these explosive moves where the market will just pull out the floor and drop, or open up the ceiling for an explosion that goes for 15 minutes to an hour and continues because it's a trend trade, whatever that may be. And again, just looking for markets that are set up and ready for an easy type of trade situation. So just looking at gold, gold and the Nasdaq are my main focus, and the amount of movement is just a lot more volatility than the other major pairs, but it's the setups that are important. Again, coming to the screen, often I won't trade Asia that much, really. I like to let the market sort of set up over the course of the day, unless we get a movement that has gone vertical into the close of a session, or consolidated with volatility at the end of a session in the U.S. That, again, if it's a Monday, Tuesday, I'm looking for high of the week, low of the week, right off the beginning maybe of Asia. If a previous day's high or low is taken out, before I'll usually sit down and trade Asia. More than likely, I will come back and look at it after that, towards the end of that 3-hour window, as that may be where the actual trade is setting up now. So the market may move 75, 50, 75 pips. It may not necessarily be a really good trade setup. It may just be sort of grinding its way in that direction. before establishing a lower high. And then heading into the gap, that gives me a thesis going into the Europe session for the probability of a good explosive setup at the London session. But more over the course of the day, Asia and London form a high and low, which gives me a geometrical range unless there's been a big movement in London. So then we look at that for either a retest of a high or a low in that New York session for a reversal trade, explosive reversal trade, or a trend trade. If it's gain day 2, day 3, it could be a trend setup. But it's understanding what's happening, just the psychology. Day 1, we have our pink separator Friday, Monday. The market comes down 75 pips again, 25, 25, 25 before going sideways. Right up until that pink line is Asia. That's the low of the day. So again, on the 1-minute chart, I'm looking for something that breaks down and gives a buy low opportunity, especially when we see this lower high. So people say, well, you're counter trending. I'm not counter trending. I'm looking for the trade once they lock in the low and they give me my thesis that my trade may not be happening until over at the London, the equity hour. So they've locked in the low, then they retest that breakout that first 15 minutes of the London session. So again, understanding time compression. If the low's already locked in, I'm looking for my long trade, and I'm looking for that first 15 minutes to be a false move. I'm on the 1-minute chart. I've got a quarter level, so I'm looking to get filled at best near or around that quarter level, but definitely before 50 if my thesis is that this could fail maybe at double zeros or keep going, but it may fail in that 50 pip explosive move. So sometimes, again, this is a Monday. They're just establishing the movement possibly for the day and for the new week. But I'm looking also just to be taking that trade being done and then looking for the possibly bigger setup in the New York session. I've talked about this before, that larger explosive moves tend to happen in New York on these pairs. On the majors, that can vary. Obviously, they may trade larger during their own home country's trading hours. So London pound may trade more during the London session. Again, there'll be setups that occur in every session. It depends on where we're at, the high and the low of the week. So again, the market moves, and then it goes back into consolidation for the next 4 or 5 hours. So once that movement's done, I'm gone. Now, I've made a ton of mistakes in the past trading these other times. You get caught into garbage, you get whipsawed, you get caught in a market that does not move, or it moves very little, and you could be holding on to some serious heat. So I'm looking for that explosive move once that hour's done, especially during London or Asia. I know 99% of the time that's my move. So I may have a bias to continue that move later, but I am going to wait for New York because I know they're going to come back and get the guy who's in profit before they move the market away, which, of course, inevitably they do. And then we see the explosive continuation. But you'll also notice that over the course of the day, again, we have our Asian range and we have our London box now. We have a geometrical structure. We have our low possibly locked in. They stop hunt down into the low, pin hammer, first 15 minutes false move. So again, understanding time compression. I'm on the 1-minute chart. My thesis is that the low is locked in. They've already hit the stops. I'm looking for my long trade in that second 15-minute bar. Ideally to be locking it in prior to 50. Come back underneath 50, and I'm looking for my long trade. I might add to that after they pull back down if there's news or in the New York session, whatever that may be. But again, I'm looking for now a breakout of my geometrical structure, a retest of Friday's high, and possibly a measured move of 2 full range expansions of that geometrical breakout. So one of the things that I'll often look for, they've come down from Friday's high and gone sideways. That tells me they've come down. This is eating into people's profits who were long from Friday night. They're working the low. They break structure, and then they work back down into the low. That tells me we're going long. Once they break out, we're at the high of the week, and we head into Tuesday. I'm looking possibly, we've got our low of the week in place. We may get traders getting trapped at the high of the week. So the market may be going long, but they're going to trap people on the first break of the high of the week structure on the new day before they come back and test the low of the week. So again, high of the week, they come all the way down, they hit the low of the week, they go into consolidation, they break structure, and they form a large W in the U.S. session. They break through the low, they lock it in, come back above it, and go sideways. This low of the week can now become a level of support. So we have the session high from the U.S. There's our high of the day. Okay, the market, that was the high of New York session. That's the high of the day. It didn't go any higher. They retested it and failed. They went into consolidation, but now we're on top of possibly the low of the week being locked in. So again, the market, if we're just trading New York, this break in structure, okay, we have a grinding trend that breaks the high before pulling back and stop hunts down into the low of the day and into the low of the week. We have pins on the bottom. This was news as well, a news candle. But this first break in structure is a snowplow, clearing out stops and then coming back down for the explosive squeeze trade back through the new high inside. Now our thesis would be that this is going to revisit the high of the week. High of the week, low of the week. We've gone sideways in a large geometrical rectangle inside of the low possibly being locked in, and a breakout back through inside of that range. So again, if we talk about geometry, measured moves, we can look at that whole lower structure. If you're not sure what I'm talking about, get Peter Brandt's books again. The larger the consolidation, the larger the probability for an explosive measured move. So these high of days inside, again, we're not really at the high of the week, but this is in the middle of the move on the way back to the high of the week. So when they split the Asian range, this pattern where they break out and consolidate is a dead giveaway that this is going to be a measured move. They've split the Asian box. You'll see this in down moves, you'll see this in up moves, and it's critical to understand that because that gives you a strong underlying bias looking for the trade to continue in this long direction. So again, if we come back and we've marked off our high of the week, we blow through that. Again, we won't look at the daily chart, but there was some other levels up top here that the market kept working its way through. The market goes for 3 hours before locking in a high. Now this creeping trend down, okay, this candle, this bull candle up long, specifically this timing window is important to understand. 1 hour prior to the 12 candle window will be a move that either goes to the low or back to the high. Now this move continued into the open. So this was a blow off move to hit the stops, trigger breakout traders. Okay, so not only does it hit stops on shorts, but it triggers breakout traders into the market at the high of the London session. That's the high of the day. Breakout traders are in, that hour ends, and then bang, in 15 minutes, the market comes down 75 pips straight back into that trade who was long off the beginning of the day. So again, understanding time compression. 1 hour up. At the end of that hour, that last 15 minutes locked in at 75 on the 1 minute chart. It consolidated into an M and then went vertical straight down right into traders who were long before reversing in the second 15-minute candle to continue its move back up. Now we broke through that high. So the U.S. session, first hour puts in a high. They break through that high. 1 push, 2 pushes, 3 pushes back up, breaking the high of yesterday. Railroad track, dropping down into consolidation on the 1 minute chart. We had a sideways squeeze. And then the third, beginning of the third 15-minute bar on the 1 minute chart, straight down in 30 minutes, 100 pips. These are the types of trades that traders need to look for in terms of the session opens. So trend trade, 75 pips up. That's coming out of this stop hunt hour with the trend. An example of with the trend. An example of with the trend at the equity market open in London. And an example of a reversal explosive stop hunt move in that first hour. Done and dusted, 175 pips, 175 to 100 pips in 30 minutes. You're done. End of the hour, and then the market goes into consolidation. And it's stayed there ever since. So I've talked about pump and dumps on these markets, looking at the market into the close. This is a great example. This market, the pump and dump started at this level after the pullback. So this level today will be important because this market could still, we've broken structure on the inside, retest this breakout level from the last 50 pip move into the end of the night. Retest sort of that 50 area at some point today before rolling over and maybe retesting the breakout trade from the high of the week. So without going too long on the video today, just the emphasis, we went back to talking about just the timings. High day, low day, double zeros and 50s. Going back, we see the false move going 25 pips above the double zero box at the high of the week, the high of the month, the high of the day on a Friday, dropping down. This is not necessarily where you would have been traded. If you waited and came to the screen thinking you're looking for something in that 12 candle window, the high was already locked in. Consolidation, explosive move. We have a final flag on our 1 minute chart. If you're not sure what the final flag is, that's where we get a vertical squeeze into the high. One push, two pushes, a 1, 2, 3, sideways 3-bar pattern. We'll zoom in on that little 3-bar pattern at the high. And again, this is time compression. Right here, these 3 bars is the beginning of the third 15-minute bar. Engulfment, 3-bar reversal. Engulfment, the market falls and drops down below the double zeros. So again, if you came to the screen in the 12 candle window, we have a lower high put in place, consolidation, higher high, 30 minutes inside, breakout, breaks down, pulls back into that breakout, bear pin hammer, vertical move, 75 pips in 8-9 minutes. The bias was to the downside. The high was already locked in. We had our 3 pushes, our M, our triple peak, our final flag, whatever we want to call it. You can call it all kinds of things, but the high was locked in. We had people trapped on the breakout. Daily time frame traders trading the break. Gold's going to go to the moon. If we squeeze this back sideways, we can see again where our pump and dump began. They took out the high. Trap traders consolidated back inside. We have low-hanging fruit all caught up high above 75. So again, pay attention to where is volume trapped. And we're looking just at the timing window. Okay, false break, pulls back, coils underneath of the final flag run-up, sideways underneath, pin hammer, bang, explosive move, back down. If you're not sure how to trade these or you're not sure what you're looking for, trade super small. Trade on your dummy account. Get the process down. Come to the screen every session and look for these things we've talked about. Day 1, day 2, day 3. Major currency pairs, you're going to get more likely a 3-day setup or a 3-session setup rather than a setup every session. Gold, Nasdaq, there's setups pretty much every single session. Definitely London and New York, but really only one of those ideal trades, again, coming back and looking at gold. If you knew what you're looking for, high of the week, high of the month. I know some traders that were already getting in up here. They were adding into it through the zeros. They were adding it into it in the move down, and they held on to that and made an absolute killing this morning. So this is an ideal setup. These are scalable, so don't look to try and scalp every single move. Look for the ones where we've got coiled markets that have built up, maybe Asia, London, New York, or day 1, day 2, day 3, or, Friday, Monday, Tuesday. We got 3 levels of rise after news, after payrolls, after the Fed, whatever. The Fed will often shift the market in a big way, trapping traders, up high or down low. And the news can be our friend when we understand how to use it, but not to get in front of it. Sometimes you'll get lucky. Other times you might just get completely killed. So I'm looking to try and eliminate as much stress from my trading as possible, capture as much as I can with minimal effort. And if I'm not sure, train yourself to walk away. Don't do things that are going to destroy your psychology. Keep things as simple as possible. Keep getting better. Stay off the screen as much as possible. And may the markets go.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.